Hold up. What it do, what it do, how y'all feeling? Welcome. This is Ash Neil's Radio. I am your host, Ash Neil. That is I. So, we talking to y'all. Yes. Now, I'm trying it again. I was just live, but technical difficulties. And it's okay because it's been a while since I've been back. And as you can see in the headline, in the title, that we are watching this Amc Gme Short Squeeze potentially play out. And yes, we have FOMC minutes coming up in about, or Jerome Powell was talking. The minutes came out 17 minutes ago, but Jerome Powell was talking in about another 13 minutes, and we're getting ready to see some market activity. What? I don't know. It can either go up or down, but today I felt like streaming, and I've been a part of this saga for about 4 years, just like everybody else. 2020 is when 2021. Sorry, I lied to y'all. 3 years. I've been a part of this saga. And early in the beginning, when everybody was streaming, I had made a couple videos because I'm a YouTuber too. And I'm not going to lie. I got scared. I did. It was a lot of things that we were doing that we weren't supposed to be doing, and I was just doing it with impunity. I didn't care. I was giving financial advice without even, I don't think I was giving financial advice, but people are saying, hey, you got to be careful what you say. So things like hold. I was a part of that movement when we changed hold to hodl, right? Because saying hold was almost like giving out financial advice. And I'm like, no, I'm not no financial advisor. So no. Hodl is what we had to change it to. We also called ourselves retards in the beginning. And then, of course, liberals got involved and said that word is sensitive. So we went to apes. We call ourselves apes. And I've been in the GameStop saga. Let me see. When did I buy GameStop? The first set of shares I bought. Now I seen GameStop 2020 around $12. It went from 12 to about 60 in January, and I was mad because I didn't buy any. But it fell from 60 to 40, and that's when I jumped on. And from then it went from 40 to like 500, right? Mind you, everybody was fresh to this, so I'm like, what's the next one? Just like everybody else. So I jumped on AMC. I think I jumped on AMC about $15, and then averaged down to about $8. She went to $5, and I just jumped through the house at it, right before the June run up. So we've been in this for about 3-some years. I've been trying to do videos, yes, but I've just been a little scared, like I said. But I think I'm going to join this YouTube game because there's a lot of YouTubers out there that I feel are missing the point when it comes down to this community and when it comes down to trading in general. I'm an active day trader. I do trade options. I'm an options guy. I trade the SPY, 0 DTEs, a lot of risky bets that they say don't do. We do in my Discord. I don't really have an actual Discord. I wouldn't call it a Discord. No, it's a bunch of motherfuckers on the phone just trading shit, right? So I will start trading live to show you my, it's not financial advice, but I am a technical trader. I don't trade on fundamentals because I don't care about fundamentals. No, we people like me and my guys, we never really cared about anything. PE ratios, earnings, EBITDA. We don't. Mind you, we trade the SPY, 0-day expiration. So I don't think the SPY is having earnings anytime soon. No. So what we do is play volatility. I love IV. I can chase IV up. I can chase IV down. So right now, if I would let you know what trades I'm in, I don't know if I can. Can I say that? Can I tell them? But the IV on these trades are disgusting. If you know what IV is, then you know what I'm talking about. If you don't, then you might want to do some research because I don't think I'm going into implied volatility structure right now. I'm just sitting here waiting another 9 minutes to see how this market react. And then maybe in another video, I can go over how I monitor price action. Give me a second. I want to make sure that everything look and sound all right. Greg, hold on 1 second. I got a couple people in my Discord. It's not a Discord, but hey, question. Hold on 1 second. I'm trying to see something. I'm trying to see if I see something. Give me a second. 9 minutes. 9 minutes. Nine minutes, y'all. Hold on 1 second. All right. All right, hold on. Give me a second. Give me a second. Bam. I'm going to turn this down real quick. I'm trying to hear something. I don't want to interrupt y'all. All right, I can hear it. Cool. All right, we back. Now, we got Jerome queued up. There is a way that I can have Jerome and the chart showing at the same time. Didn't have that kind of time to do it today, so we're going to be fluctuating back and forth between the chart and Powell. Now, we're going to hear Powell all day talking. Hold on one second. But we ain't going to see him because I want to see the price action, right? So what we got? We got about 8 minutes. 8 minutes. Now, I'll give you a little rundown of hold on one second. Got to mute y'all out. I'm going to give y'all a rundown of what I do when it comes down to day trading. Like I said, I'm a technical trader, so I do use EMAs, MACDs, RSIs, TTM squeeze, different time frames, of course, from the daily chart to the 4 hour to the 5 minute, all the way down to the minute. As you can see, I keep my computer, I like to keep it on the 1 minute because I don't know if I got ADD or whatever it is, but I got to see them prices moving, right? But I trade on the 5. When I trade on the 5, it gives me some cold buy-ins. I'll show you guys later. Right now, we're just going to ramble real quick to introduce myself. But when it comes to being a technical trader, I do sit back and wait for price action to come down to key levels of the chart. So if I can explain to y'all real quick before we go to Powell. Now, I'm an EMA guy. I know there's a lot of YouTubers out there that use, the 10, the 9, the 20, the 13, 48, all of them. But when it comes down to all these different EMAs, what I notice is that everybody, well, I wouldn't say everybody, but a lot of us, we use the 200 EMA. We love the 200 EMA. It is a hell of an indicator. It actually tells me when price is getting ready to fluctuate a lot more, with a lot more volume than anything else. So what I use, my EMAs, how they are set up, I use the 14, 32, 200. Now, those are my EMAs. I also use the 200 MA. Now, the 200 MA and the 200 EMA, when you use those two together, because a lot of institutions, they like to run the 200 MA. They use a simple moving average because of whatever reason they do. But I do like using both of them because it can tell you if something is already oversold, can go lower. It tells you if something that's overbought, can go a little higher. So when you use both of them, you can kind of see a channel being traded in those ranges. But when it comes down to trading, like everyday day trade executions, I would sit here just like this. As you can see, GameStop. Now I'm gonna tell you my EMAs are set up. I told you it's 14, 32, and 200, right? This is how I keep it simple. My 14 is green. My 32 is red. Why? I don't know. It's easy on the eye. You know what I mean? So yeah, red and green just tells me that price action. I'll tell you how I set it up. Green is bullish, red is bearish, right? We kind of know that. It doesn't matter if you're a trader because you played the down way, right? But if you want to see how I set this up, is normally when the red line, I'll call it the red line for y'all. It's the 32 EMA and then the 14 EMA. But when the red line is dominating the green line, we're gonna put this in layman's terms. The price tends to go down. When the green line dominates the red line, the price tends to go up. I'm going to make this shit so simple. Everybody's going to talk about crosses, 5-minute crosses, 10-minute crosses, daily crosses. Yes, them daily crosses, those crosses are key things for price action. But when it comes to buying in, this is what you sit here and you wait for. So as you can see, the GameStop is trading right at the 1 minute. Now remember, I'm on the 1 minute. It's trading right underneath the 1 minute green line. 14 EMA. What we wait for is for this candle here to go up above it on the 1 minute. On the 1 minute. I'll show you the 5 in a minute, but we're going to look at the 1 minute just for a second because I got a lot to say about the 1 minute. Especially when it's volatile like this and a day like this, you don't really want to trade on the 5 because you can actually get missed an opportunity to take your profit, or you can also miss an opportunity for a buy-in. Now, my execution normally don't come in until this candle on the 1 minute comes up and holds this 14 EMA. That's when I'll be looking to buy in. Now, mind you, this is a daily execution day trade if you're going to get in and out of something quick, right? Mind you, if you look at the SPY, we have the 200, the VWAP, the 14 and the 32 all in one area, getting ready to cross, right? Now these are, some people call them platinum crosses, when all three of the indicators are getting ready to cross, all three of the EMAs. You could think that, but sometimes you can get faked out and then the thing will go the other way, right? So what I like to do is to confirm that these candles are holding the price. So I wouldn't get into any of these trades since it's trading underneath it, right? I wouldn't buy it to the downside either because it's already made the move down. Now, as you can see, AMC is coming up to this. She just cracked the 1 minute 14, right? Now that'd be my signal in my head. Be like, okay, let's see if she hold it. If she hold it, I get in. If not, let it continue to fall, right? Now, mind you, this is a 1 minute cross that's getting ready to play out. I'm gonna check the 5 in a second. I just want to get this 1 minute TA out. The thing about holding these key levels is if the price tends to move, it will move drastically because of a key crossover. This 1432 cross is disgusting. I've used the 1348. I've used the 9, 10, 20. I've used all of them. But for me, the way I set these up was they're daily movements, right? They're daily moving averages. If you really want to get down to it, they're daily moving averages. So my 14 is a 2 week, 14 days, and my 32 is a 1 month, 30 days, right? So when I do the 1432, it just made more sense to me personally, right? I'm not saying mine's the best. No, everybody else got their own. But as you can see, I did not get into AMC. I'm just going over some TA right now. I'm not going to say what I got yet. But if you were trading daily, doing a day trade, this is why I use these EMAs. If it came up, right, how she did, I'll show you. She came up and she got smacked right at the 32 and came down. Would I have gotten in? No. Why? Doesn't look like it's bullish yet. This thing can go up and pass this 32 EMA and I still won't get in. Why? Because it just looked like it's having a reversion pop to continue down, like she just did. Continue down, right? But the key way to get into these trades, to not get whipsawed, is just wait. Wait. People can talk about the MACD all day. Here's the MACD on GameStop. It's green on the 1 minute. They can sit there and say that, oh, yeah, the RSI, it cooled off to 30. Oh, this could be interesting. None of it matters to me, personally. Don't mind me. I'm nobody. I'm no guru. I don't give a shit how you trade. I'm just telling you how I trade on a technical standpoint, right? What I like to see is simple. Simple. I want this green line to cross that red line. That's it. That's it. No rocket science to it, right? And I won't get in. See? There you go. It's going to continue to fall down. Now, this is the 1 minute I'm talking about. I'm just giving you simple TA on the 1 minute. If you're playing high volatile stuff, you're going to want to trade on the 1 minute. I don't care what nobody tells you. If you're a high frequency trader like me, you're going to want to trade on the 1 minute. Now, 5 minute. Let's go to the 5 minute chart. This is my baby. Now, the thing about the 5 minute, it's a little easier on the eyes, right? It's a little easier on the eyes, but it gives you key levels. It gives you key levels. It's also like one of those things that, how can I say? Like I said earlier, things that are oversold can go lower. Things that are overbought can go higher. Now, AMC on the 1 minute, right? It would tell you something. It would say, hey, it's looking bearish, right? It's looking real bearish and may continue to go down, right? Obviously, you see that candle live moving down. You move to the 5 minute, the 5 minute would tell you a different story. What story does it tell you? It tells you that it's going down. But it also tells you that you are basing out with this 200 EMA. If you look at this 200 EMA, which is this purple line, right? This is what I follow. This is what I follow. This 200 EMA has been going down. But now it's been going up and up and up and up and up and up. Even though the price is coming down, this 200 EMA is slowly grinding up, right? right? So this is what I'm telling you about buy-ins. You see how AMC can just keep coming up. Now this is the 5-minute chart. You keep coming up to this 14-minute on the 5 and continue to fall. When AMC comes and holds this 14, mark my words, down pressure is over. And that's just simple TA. That's just simple TA. And you don't have to run these stocks up 300%. You don't have to. You can, but you don't have to. So when it comes down to, for me, because I am going to start executing trades live so you guys can get an understanding of what it is that I do. But I'm an IV guy. I love playing implied volatility because you can steal contracts for a couple bucks and turn it into $15, $20, $30 a piece. So right now we're just in this, I don't know, you call it a black swan event. We're all waiting to see what happens in about, oh, sorry, Jerome is here. Oops, I'm sorry. He's talking. Forgiveth me. Hold on one second. Hold on one second. Hold on. We got Jerome. I can't hear him. Hold on. Yeah, we're coming down a little bit. Hold on, I gotta get my boy Jerome. I can't hear him.
A bit below that
There
seen
we
in
go.
the first quarter. The unemployment rate ticked up but remains low at 4%. Strong job creation over the past couple of years has been accompanied by an increase in the supply of workers, reflecting increases in participation among individuals aged 25 to 54 years and a continued strong pace of immigration. Nominal wage growth has eased over the past year, and the jobs to workers gap has narrowed. Overall, a broad set of indicators suggests that conditions in the labor market have returned to about where they stood on the eve of the pandemic, relatively tight but not overheated. FOMC participants expect labor market strength to continue. The median unemployment rate projection in the SEP is 4.0% at the end of this year and 4.2% at the end of next year. Inflation has eased notably over the past 2 years, but remains above our longer-run goal of 2%. Total PCE prices rose 2.7% over the 12 months ending in April. Excluding the volatile food and energy categories, core PCE prices rose 2.8%. The Consumer Price Index, which came out this morning and tends to run higher than the PCE price index, rose 3.3% over the 12 months ending in May, and the core CPI rose 3.4%. The inflation data received earlier this year were higher than expected, though more recent monthly readings have eased somewhat. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households and businesses and forecasters, as well as measures from financial markets. The median projection in the SEP for total PCE inflation is 2.6% this year, 2.3% next year, and 2.0% in 2026. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. In support of these goals, the committee decided at today's meeting to maintain the target range for the federal funds rate at 5.25% to 5.5%, and to continue reducing our securities holdings. As labor market tightness has eased and inflation has declined over the past year, the risks to achieving our employment and inflation goals have moved toward better balance. The economic outlook is uncertain, however, and we remain highly attentive to inflation risks. We've stated that we do not expect it will be appropriate to reduce the target range for the federal funds rate until we have gained greater confidence that inflation is moving sustainably toward 2%. So far this year, the data have not given us that greater confidence. The most recent inflation readings have been more favorable than earlier in the year, however, and there has been modest further progress toward our inflation objective. We'll need to see more good data to bolster our confidence that inflation is moving sustainably toward 2%. We know that reducing policy restraint too soon or too much could result in a reversal of the progress that we've seen on inflation. At the same time, reducing policy restraint too late or too little could unduly weaken economic activity and employment. In considering any adjustments to the target range for the federal funds rate, the committee will carefully assess incoming data, the evolving outlook, and the balance of risks. In our SCP, FOMC participants wrote down their individual assessments of an appropriate path for the federal funds rate, based on what each participant judges to be the most likely scenario going forward. If the economy evolves as expected, the median participant projects that the appropriate level of the federal funds rate will be 5.1% at the end of this year, 4.1% at the end of 2025, and 3.1% at the end of 2026. But these projections are not a committee plan or any kind of a decision. As the economy evolves, assessments of the appropriate policy path will adjust in order to best promote our maximum employment and price stability goals. If the economy remains solid and inflation persists, we're prepared to maintain the current target range for the federal funds rate as long as appropriate. If the labor market were to weaken unexpectedly, or if inflation were to fall more quickly than anticipated, we're prepared to respond. Policy is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate. We'll continue to make our decisions meeting by meeting, based on the totality of the data and its implications for the outlook and the balance of risks. The Fed has been assigned two goals for monetary policy: maximum employment and stable prices. We remain committed to bringing inflation back down to our 2% goal and to keeping longer-term inflation expectations well anchored. Restoring price stability is essential to achieving maximum employment and stable prices over the long
Chart
run.
ain't doing nothing.
Our success in delivering on these
Still coming
goals
down.
matters
Still coming
to all
down.
Americans. We understand that our actions affect communities, families, and businesses across the
We are
country.
still coming down.
Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
Oh, questions. All right. We're about to ask Powell some questions. What we going?
Thank you, Mr. Chairman.
Hold on one
Steve
second.
Leisman, CNBC. Just wondering
Steve.
if you could walk me
guy.
through
Oop, Spy got a pop.
committee's average
Spy got a
inflation
pop.
forecast. Core PCE is now forecast to be 2.8% by the year end. It's already 2.75, and after today's number, there were several forecasts on the street that it would be 2.6 at the end of this month. Does that tell you that the average official expects no further progress in inflation, and in fact that it's going to get worse? And if you have this wrong, doesn't it mean that you sort of you could have wrong the outlook for rates there?
Yeah, so what's going on there is that
You got it wrong,
we
pal.
had very low readings in the second half of last year, June through December, really. And we're now lapping those. So as you go through the 12-month window, a very low reading drops out and a new reading comes in. The new reading gets added to the 12-month window. So it's just a slight element of conservatism that we're assuming a certain level of incoming monthly PCE and core PCE numbers. We're assuming, a good but not great numbers. And if you put that on top of where we are now, you get a very slight increase in the 12-month reading. Now, do we have high confidence that that's right? No, it's just a kind of conservative way for forecasting things. If we were to get more readings like today's reading, then of course that wouldn't be the case. So it's just a forecasting device. I think. Let me say that we welcome today's reading and hope for more like that.
But if it comes in, just to follow up, it comes in the way you forecast it, it would seem strange for you to be cutting rates at all in context of a rising core PCE. Thank you.
Yeah, no, I mean, I think what we said is that we don't think it'll be appropriate to reduce rates and begin to loosen policy until we have more confidence that inflation is moving back down to 2% on a sustainable basis. And that's the test we've applied. I don't know that this rules that in or out. I mean, really, it's a forecast, a fairly conservative forecast, month by month, that would lead to slightly higher, 12 months rates by the end of the year. If we get, good better ratings than that, then you will see that come down or remain the same. If you're at 2.6, 2.7, that's a really good place to be.
Nick Tamaros of the Wall Street Journal. Chair Powell, if I look at the rate projections, I see 15 of the 19 that are anticipating either one or two cuts this year, fairly evenly split between the two. And so I wonder if you could explain a little bit more the nuances or the differences there. Would 2 or 3 more inflation readings, like the one that we saw this morning, make a September interest rate cut possible?
I'll tell y'all one thing, my motherfucking stream looking
So
clean.
as far as the SEP part of that is concerned, as you know, I talk to all of the other participants on the FOMC every cycle, and we talk about their summary of economic projections and the their dot plot and everything. And what I hear and see is that people are looking at a range of plausible outcomes, and in many cases they're thinking, I can't really distinguish between two of these. They're so close for me. These are very close calls. But we ask them to write down the most likely one, so they do. And I think as you've said, there's 15 of the 19 are kind of clustered around 1 or 2. So I think I would look at all. I look at all of them as plausible. But I look at I think that does tell you kind of what the committee thinks. But what everyone agrees on is it's going to be data dependent. No one brings to this or takes away from it, that is on the committee, a really strong commitment to a particular rate path. It's actually just their forecast, and it's a combination of their forecast and their own reaction function. But again, everyone would say that this is very data dependent, and I don't hold it with high confidence. And I think if you're looking for and don't really think that they're not trying to send a strong signal that this is what I think is the right thing. It's just what they think at a given moment in time, subject to data. In terms of future meetings, we haven't, we don't make decisions about future meetings until we get there. I think in terms of what we need to see, I mentioned it earlier. We want to gain further confidence. Certainly,
right.
Good inflation readings will help.
Sam Brown earned a Purple
no.
Heart and
We
knows
gotta
what
add.
it
Oh
means
no,
to
we gotta
fight.
add, y'all. Sam
He'll
Brown
get
is over here
inflation
interrupting
under
our stream.
control
Hold on
and
one second. We gotta
unleash
get Sam Brown up
America's
out of
energy.
here. Come on, Sam. Don't do us
What's
like
happening
that,
in the labor
Sam.
market, what's happening with
Come
the
on,
balance of
Sam.
risks,
Thank you.
what's happening
Appreciate
with
it.
forecasts, what's happening with growth. You look at all of that, and you ask, are we confident? Have we reached an appropriate level of confidence that inflation is moving down sustainably to 2%? Or alternatively, do we see really unexpected signs of weakness in the labor market that would call for a response? Which is another thing that could happen. But again, we don't see that, and we see today's report as progress and as building confidence. But we don't see ourselves as having the confidence that would warrant beginning to loosen policy at this time.
And if I could quickly follow up, did you or any of your colleagues
All right, market is
change
still coming down. Market is still
your
coming down, ladies and gentlemen.
interest rate
Hold on one second.
projections after
Market is still
8:30
coming
or whenever
down.
You got the inflation numbers today.
So this happens too often, but it does happen. It just is, data came, I think it happened a few meetings ago. So when that happens, when there's an important data print during the meeting, first day or second day, what we do is we make sure people remember that they
can
have
hear
the
'em.
ability to
We don't have to
update.
see 'em.
We tell them how to do that.
Oh, no.
And some people do, some people don't. Most people don't. But, and I'm not going to get into the specifics, but you have the ability to do that, so that what's in the SEP actually does reflect the data that we got today, to the extent you can reflect it in one day. I think we'll see PPI tomorrow. We'll know more about the PCE reading as the month goes on, but the initial CPI reading and its kind of first level translation to PCE we did have this morning. We were briefed about it, and people were able to consider whether they should make changes. And as I said, some people generally do, but most people generally don't.
Hi, Chair Powell, Janelle Marte from Bloomberg. As you noted,
Bloomberg.
the labor market is now in many ways back to where it was before the pandemic. I wondered if you could comment on how officials are viewing that. So do you think that there still needs to be more cooling in the labor market to bring inflation all the way down to 2%? Or is there any sense that maybe the labor market is more vulnerable now to higher rates now that many of those imbalances have eased?
Right. Good question.
Sure. So, by so many measures, the labor market was kind of overheated 2 years ago, and we've seen it gradually move back into much better balance between supply and demand. So what have we seen? We've seen labor force supply come up quite a bit through immigration and through recovering participation. That's ongoing, mostly now through the immigration channel, but still we've had some increases in prime age labor force. In terms
I gotta
of
say
on
something
the
about this
demand
immigration
side,
thing.
you know, we've seen
This labor challenges. So hold on one
well,
second.
we've seen quits.
Let 'em talk.
Moving down. We've seen job openings moving down. We've seen wage increases moving from very, very high levels a couple of years ago back down to more sustainable levels. We have seen unemployment creep up now 6/10 over the course of a year or so, very, very gradually. So you put all that together, what you have is still low unemployment, still 4% unemployment, historically low. But it's moved up a little bit. It's softened a bit, and you know that's an important statistic. But more than that, you've got strong job creation. You have payroll jobs still coming in strong, even though there's an argument that they may be a bit overstated, but still they're strong. So that's what we see. We watch the labor market, of course, and the economy as a whole, but the labor market very carefully, and that's what we see. We see gradual cooling, gradual moving toward better balance. We're monitoring it carefully for signs of something more than that, but we really don't see that.
As a quick follow-up, the surveys that make up the jobs report are showing different tales. There's been some divergence, especially we saw in the last report that we got on Friday. So how do you interpret that, and how does it change your view on the labor market?
So sometimes you can't reconcile the differences. You just have to look at it and try to understand, and that's why it always makes sense to look at a series, in 3, 6, and 12 months of things rather than just one report. But you're right to point to the last report where there were job losses in the household survey, job gains, big job gains in the establishment survey. So, we're left with ambiguous results, and we have to deal with that uncertainty around data. Nonetheless, the overall picture is one of a strong and gradually cooling, gradually rebalancing labor market. Job openings, while they've come way down, are still, greater than the number of unemployed people. The jobs workers gap is still a significantly positive number, greater than it was before the pandemic. So overall, we're looking at what is still a very strong labor market, but not the superheated labor market of 2 years ago, or even 1 year ago.
The labor market was
Thanks,
strong
Chair Powell.
because
Neil Irwin with Axios.
the union
back on the rates path
was saying we
the
needed a
SEP
little bit
showed
more,
quite
little bit more
large
money.
shift
While
of,
these
rate cut
companies were
expectations
making
relative to
record
March.
profits,
That's a
they
period
didn't
in
want to
which
give it to the
economic
workers.
data flow
So
hasn't
the
been
workers
that
started
dramatic.
to rally.
How can you provide some
And
color on what
they
changed
were
in attitudes on the
strong.
committee,
They were asking
the
for a
last 3
lot
months
more money.
to see a,
But you
much
want to leave
shallower
out
path
that
of
key
rate
part,
cuts this
that
year?
key part
The big
about
thing that changed was the inflation forecast. So the inflation forecast moved up
executives
several
making
tenths
record profits.
for the end of the year. And as I mentioned earlier in the, what did we take away from this? We had really, really good inflation data in the second half of last year, then kind of a pause in progress in the first quarter. And what we took away from that was that it's probably going to take longer to get the confidence that we need to begin to loosen policy. So the sense of that is that rate cuts that might have taken place this year, take place next year. There are fewer rate cuts in the median this year, but there's one more next year. So if you look at year-end 2025 and 26, you're almost exactly where you would have been. Just it's moved later because of that progress. Now you get different data today. So we'll have to see where the data light the way. We're at the economy has repeatedly surprised forecasters in both directions, and today was certainly a better inflation report than almost anybody expected. And we'll just have to see what the incoming data flow brings and how that affects the outlook and the balance of risks.
Everybody got a
Smart.
question. I got a question.
Gina
I got a
Smart,
question,
New York Times.
pal.
Thanks for taking our questions. In the summary of economic projections, the long-run interest rate forecast moved up a bit. I wonder if we should read that as a sign that you think that policy is not sort of as restrictive as we previously expected. How should we interpret what that means about how the committee views its current policy setting?
So two things about that. One is this. You're right, it did move up, but I want to remember to point out that long-run neutral rate of interest is a long-run concept. It really is a theoretical concept, can't be directly observed, and what it is the interest rate that would hold the economy at equilibrium, maximum employment, and price stability potentially years in the future where there are no shocks. So it's a little bit, it's not something we observe today. Today we've got a very specific economy with all kinds
Market's
of
still
shocks
coming down.
we're still
Market's
getting
still
over
coming
from the
down.
pandemic. So it's, I don't think that the concept of R-star, it's a very important concept in economics and in what we do, but honestly it doesn't really get you where you need to be to think about what appropriate policy is in the near term. But back to your original question, people have been gradually writing it up because I just think people are coming to the view that rates are less likely to go down to their pre-pandemic levels, which were very low by recent history measures. Now we can't really know that. That's an interesting dispute and discussion to have now. But ultimately, we think that things like the neutral rate are driven by longer run, slow-moving forces, and there's a really good question about whether those really have changed or whether instead rates and the economy are experiencing a series of persistent but ultimately temporary shocks. That's been the debate, and we can't know. But in the meantime, we're making policy with the economy that we have, with the distortions that we have, and I also, to your other point, I think it is the case that as time has gone by, the question of how restrictive is policy has become one that everyone's asking, and we're asking it too. And my answer has been that policy is restrictive. The question of whether it's sufficiently restrictive is going to be one we know over time. But I think for the reasons I talked about at the last press conference and other places, I think the evidence is pretty clear that policy is restrictive and is having the effects that we would hope for.
Pal, you're killing the market, man. You're killing the market.
Well, thanks to your pal Howard Stein with Reuters. Just to carry that a little further, should we read this as a conclusion, the combination of tipping to one cut this year and acknowledging further progress on inflation as kind of a mark to market on the level of restrictiveness that you need, that you in fact have concluded that you weren't quite there yet?
I'd be reluctant to try to draw that conclusion. I think this is about, looking at the incoming data and asking how much progress are we making on inflation and how is the rest of the economy doing? Is the labor market still strong?
Woo.
That's what we're thinking.
Dumb.
You can translate it into the language you're talking about, but to me the focus is more on we have a goal which is price stability, another goal which is maximum employment. How are we doing there? We think we've got a good, strong labor market still. We think we've been making progress toward the price stability goal. And then for a while there was a pause, and we look at today's thing and we think, well, that's a good reading, and we hope we get more like that. And in the meantime, we're asking, is our policy stance about right? And we think yes, it's about right. We're prepared to adjust it as appropriate, but we think
All right,
we think
Spy.
we're getting the things that we would want to get, broadly speaking. And that's why we've been at this policy rate now for almost a year.
So just to follow up
The
on
S&P
that,
500 is
the
trying.
curious
She's
thing
trying
is
to creep
you've got
back.
Now this restrictive policy in
I don't know how
place,
much longer he's
and
going to be
virtually
talking.
no change in any of the major things for all of this year. You've got
no.
growth that stays above long-run potential throughout the forecast period, unemployment that never goes above the long-run estimate, right, of 4.2. So this isn't a story of slack improving inflation. So where's the improvement in inflation coming from that it's going to pick up pace so much in 2025?
Well, it's been coming. Where's it been coming from? We'll start with that. Clearly, a lot of some of what we've been getting is just the reversal of the unwinding of the pandemic-related distortions to both supply and demand, and that is complemented by and amplified, supported by restrictive monetary policy. So those two things have been working together. We've also had a very positive supply shock on the labor side, and also you get a positive supply shock when the supply conditions unwind and return to normal. So you've had, above trend potential growth and high growth, and yet you've had the benefit of inflation coming down, really fast actually last year, and you will see what the rest of this year brings. So these dynamics can continue as long as they continue. I mean, ultimately, the question
Hold on,
is
we getting some
ultimately,
action. Hold up.
Are you down to demand? And we don't know that, though. I mean, look at today's report.
Sorry, pal.
We see more like that. We can't know what the future holds, but in the meantime, we've made pretty good progress on
Spy look
inflation
like she's getting a golden cross
our
right here on the
current
1
stance.
minute. All EMA is getting ready to cross with the 14 EMA at the bottom trying
Michael
to
McKee from
dominate. Like I
Bloomberg
told you
Radio on
earlier.
television. The base case of the committee seems to be that there is going to be at least one rate cut this year, but your growth forecast doesn't see any slowdown in the rest of the year, nor does the unemployment forecast see any significant weakening of the labor market. And your inflation forecasts basically average out to no change. So if at the end of the year there is no change from conditions now, why would you anticipate cutting rates? What would be the point for a rate cut?
Well, we think policy is restrictive, and we think ultimately that if you just set policy at a restrictive level, eventually you will see real weakening in the economy. So that's always been the thought, is that since we raised rates this far, we've always been pointing to cuts at a certain point, not to eliminate the possibility of hikes, but no one has that as their base case. So no one on the committee does. But so that's how we think about it, and that's what we've been getting. That's what we've been getting is good progress on inflation, with growth at a good level, and with a strong labor market. Now,
Price gouging. Talk
ultimately,
about it. Price gouging.
We think
you don't
rates
want to talk
will
about
have
it.
come down
You
to
don't want to talk
continue
about it.
Support that. But
Ain't it funny how they
so
leave out
far,
price
they haven't.
gouging when it comes down to inflation?
That's why
It's
we're
funny.
watching so carefully for signs of weakness. We don't really see that. We kind of see what we wanted to see, which was gradual cooling in demand, gradual rebalancing in the labor market, while we're continuing to make progress on inflation. So we're getting good results here.
Well, to follow up, is there any kind of concern for the housing industry or financial stability, banks, in leaving rates where they are for too long at this point?
On housing, the housing situation is a complicated one, and you can see that's a place
Oh,
where
pal, you
rates
putting
are
me to
really
sleep, man.
having a significant effect. I mean, ultimately, the
All right,
best
we're getting
thing
a little
we
bit of
can do
action.
for the
We're
housing
getting a little bit of
market is
action,
to
y'all.
bring inflation down, so that we can bring rates down, so that the housing market can continue to normalize. There will still be a national housing shortage, as there was before the pandemic. There will still be one, but the distortions that we see now with lock-ins and things like that, low mortgages. In terms of banks, the banking system has been, solid, strong, well-capitalized, lending. We've seen good performance by the banks. We had the turmoil early last year, but banks have been focusing on bringing up their liquidity, bringing up their capital, and having risk management plans in place. So the banking system, seems to be in good shape.
The banking system seemed to be in good shape. He said that. He said that before all those banks
Chris
failed
Reader at
last year.
Associated Press. I was wondering if we can, on inflation, if you can tell us a little more about where you see inflationary pressure in the economy.
All right, if you want to get
You
back to
mentioned,
indicators.
Labor markets coming into better balance.
If you want to get back to key buy-ins, remember we're on the 1 minute chart. GameStop came up and it held that 32. It did. It's getting ready for this 14 across the 32. Am I in? I'm already in. But would I get in right now on this play? Yes, but not yet. I'll tell you when the key level, not financial advice, but what I do to get in.
Tell us more
So
about
I think it's true that that inflationary pressures have come down, but we're still getting high inflation readings. So, and I think you can see it in various places. In some parts of non-housing services, you see elevated inflation still, and that's probably it could be to do with wages. Goods prices have kind of fluctuated. There's been a surprising increase in import
Spy would have got
prices on
bought. You
goods,
see how this
which is
14
kind of
just
hard to
crossed this
understand.
32
And,
right here
may-
on the
may,
1 minute? That would have been a
we've taken
buy.
some signal from that, but
There you go, right there.
you
That's
know,
a
and
buy
of course
for you,
housing
right
services,
there.
you're-
I didn't
you're
buy it.
seeing-
I'm not telling you to
continuing
buy
see
it.
high
I'm just telling you
readings there.
how to read my
To
entries.
some extent, that's
There's that
catch-up
GameStop
inflation
pop.
from
There's that
earlier
GameStop pop.
pressures,
Now,
but,
mind you,
I mean,
there's going to be a
overall,
cross
you're
here.
right.
There is going to be
Inflationary
a
pressures have
cross.
come down. As I
When it
mentioned,
crosses, this
the
candle
labor
will
market
come
is
back
coming
down to
into better
test that
balance.
cross.
Wages
And
are
that's when
still
I
running,
would buy.
I
Not you.
would
I'm not
say,
telling no financial
above,
advice given. But we're going to
a
watch it play out.
sustained path, which would be that of trend inflation and trend productivity. You're still seeing
Whew.
wage increases moving
Fine.
above that. We haven't thought of wages as being the
Here
principal
we go.
cause of inflation, but at the same time, getting back to 2% inflation is likely to require return to a more sustainable level, which is somewhat below the current level of increases in the aggregate.
Here we go. We moving.
Hi, Chair Powell, Rachel Siegel from the Washington Post. Thanks for
Rachel
taking my
Siegel,
questions.
what you got to say?
There's obviously a lot of focus on how many,
many
cuts
questions
could
they
be
got,
expected
bro?
this year, but can you give us a sense of what one cut by the end of the year would actually do to the economy?
All right, this would have been bullish for me too. This right here would have been bullish for me.
Was a cut by the end of the year, or even two?
These two
I think
candles,
if you look back
right?
in 5 or 10 years,
Broke past
and
this
try to
whole
pull out the
consolidation.
significance to the U.S. economy of
And
one
it held to
25 basis point
14.
rate cut, you'd have
So that would have been a
job
good
on
buy-in
hands.
for me right there. Just
So
to
th-
catch it.
that's not how
Now
we look
watch
at it,
this.
you know.
There's the
Really,
cross.
the whole
Remember what I
rate
said?
path
She's going to
matters,
cross,
and
but that candle was going to
I
come down
do
and test that
continue
cross.
to think
That would
when-
be
when
my
we do
buy
start to
signal. I'm not
loosen
telling nobody
policy,
else to do it.
that
Just
will
telling
show
y'all
up
how
in
I play the
significant
market.
loosening in financial
Here's the
markets
cross. There's the
and market will
retest.
price in what
And
it
then we
prices
take
in.
off.
I have no way of saying
Simple.
We're not
No
at that
rocket
stage, so I
science
don't know
needed.
what we'll be thinking
Maybe a little
at
rocket
that
science.
time,
But these
but
boom booms be crazy.
it's a consequential decision for the economy, and you want to get it right. And fortunately, we have a strong economy, and we have the ability to approach this question carefully, and we will approach it carefully while we're very much keeping an eye on downside economic risks should they emerge.
And you've been talking about this clear sense that it's just going to take longer to have the confidence that's needed for rate cuts. Is there something about what happened in the first couple of months of the year that you're seeing differently now with more time or hindsight? Do you still characterize it as expected bumpiness or something more lasting that is affecting your policy for the rest of the year?
Right.
We you always want to avoid the tendency to dismiss the parts of inflation that we don't like and just make it go away. But we had a quarter where inflation was running higher, and yes, I could stand here and say,
How long is you going to be talking, man?
it's stuff we shouldn't have taken signal from, but it is what it is. You have to, low inflation is low inflation, high inflation. So if you have a quarter where it's higher, we tried not to take signals from
There's
the
that
first couple of
test.
months, but we got a third month. and
There's
we said,
that
okay,
test right
the signal
there.
we're taking is that we think it's going to take longer to get confidence that inflation is moving sustainably down 2%. That's what we said. I think that
We
was
check
the
it
right
on the
thing to do.
5.
I still
Let's
think
say we
that's
got
the right
in.
thing to
Just
do.
we're just
Now we
gonna
have today's inflation reading, which is very different.
dry
much more
play.
positive.
Is that a thing?
We're gonna have
Can we
to
dry
see
play?
what
Can
the
we play
trend is,
without playing?
what's gonna be
Mentally
the
play?
data
We're
going
gonna call it
forward.
mentally play.
We're
Let's say
looking
we
for
bought it in
something
right
that
there on
gives
that
us
retest, right?
confidence that
Let's check the
inflation
5
is-
minute. Let's
is
see what
moving
happens.
sustainably down to 2%. And
We're
readings
in.
like today's,
Oh, look at that.
that's
The
a
5
step in the
minute
right
is doing what I
direction, but,
wanted to do. It
one
looked like
reading
Amy's
is-
1 minute.
isn't-
She's
it
coming to
just-
hold the 14 on the
so
5
one
minute. She
reading, you don't
goes
want-
up
you
and
don't wanna be
holds this
too
14 on the
motivated by
5
any
minute.
single data point.
It's going to be a nice little reversion. Crack back past this 200 on the
Hi,
5
Chair
minute.
Powell. Thank you for
There's
taking
going to
my
be a
questions. I'm Jo
1432
News.
cross on the 5 minute. So yes,
What's
this
your
1
message
minute
to
is will
Americans
allow
who
you
are
to get
seeing
in
encouraging
earlier than
economic data
any
but
other time
don't
frame.
feel good about this economy?
I don't think anyone knows, has a definitive answer why people are not as happy about the economy as they might be. And we don't tell people how they should think or feel about the economy. That's not our job. People experience what they experience. All I can tell you is what the data show, which is we've got an economy that's growing at a solid pace. We've got a very strong labor market with unemployment at 4%. It's been a long time since we've had, a long stretch of time with unemployment at or below
No,
4%.
sorry. Amy
Very
was on the
long
1
time.
minute or the 5 minute.
We had a
Ah,
period of high
forgive me.
inflation.
Ah.
Now, inflation has come down really significantly, and we're doing everything we can
Wow.
to.
You see how having your
that
charts on the wrong
inflationary
time
so
frame could
fully
make you
to a
miss
halt
out.
and fully restore price
AMC
stability.
crossed already
We're
on the
confident
1,
that we'll get
and then
there.
she came down to
And in
retest,
the
just like how
meantime,
GameStop is doing
it's
now.
going to be painful for.
I accidentally
people,
had it
but
on the
ultimate
5
pain would
minute.
be a period of long period
Where
of
my
high
buy-in
inflation. It is
just
people
came.
who,
That was my
lower
buy-in on the
income
5
people,
minute.
people
It
at
just
the margins
came.
of the economy
But on the
who,
1 minute, I
um,
could have
who
beaten.
have the worst experience.
coulda
who
beaten it.
Experience the most pain from
Could have got it right here
So,
on this cross.
it's for
right
those
here.
people, for all Americans, but particularly for those people that we're doing everything we can to bring
But I would have
inflation back
waited
down.
for this retest anyway. So let's
Just a
go.
quick
Let's
follow-up
go.
here.
Let's
You
go.
indicated one interest rate cut sometime this year, and I know you don't have a crystal ball up
Come
there,
on,
but
man.
a lot
Stop
of
asking
people
this
are
man questions,
watching
man. We got to talk, man. We got to go ahead and
see that,
trade, baby.
Borrowing money remains very expensive.
Yes,
For
it
everybody
is.
who's out there waiting on a rate cut, about when can consumers expect some relief?
Well, I don't have a precise date for you, but what we said is that we
They
want to
said
make
borrowing
sure that
money
we're confident
is
that
getting
inflation is
expensive.
actually moving back down to 2%.
Stop borrowing money.
When we are, then we can look at loosening
Simple.
policy.
Quit trading on margin. Go get your own cash
Having
account.
that kind of confidence that inflation will be at 2%, it just pays benefits to the whole economy, to all Americans for a long period of time. We had that period for a very long time. We very much want to get back to a place where people can not think about inflation. It's just not a concern in the everyday economic decisions that they make. We were there for a long time, and our goal is to get back to that place. And we've made good
About to
progress.
zoom y'all in a minute.
And we're in the phase now of just sticking
As
with
soon
it.
as Powell get his ass up out of here. It look like the market is gearing up. It look like the market is gearing up for something. As soon as Powell leaves, you guys. As soon as Powell
Drawing on the
leaves.
change in the statement on there being modest further progress on inflation. Halfway
time for my medicine.
through the year and after today's
Can I say that?
CPI release, what have you and other committee members found that has been particularly encouraging to you? And just in terms of the conservatism, how much of that is about?
Well, I guess that play
sticking
would have
this
worked out. Look at that
into
play.
inflation?
We would have been in this play right here on this cross. My
encouraging
goodness.
has
Is that
been
rocket science? I don't
that,
think so. But it's just simple TA.
Growth,
Simple
the
TA.
growth clearly that we had last
Same with
year, particularly
AMC.
the
Once the
second
cross
half of last
happens,
year,
you
and
got
we
action.
continue to see
Same for the
still
downside.
strong
Once we
growth, solid growth this year.
when I
That's
go
been
live
very
and do my
encouraging.
live day trades,
you
I'm
go back a
explaining
year,
everything in real
there was a real
time.
concern about,
Right now, I'm just
very much
live to
slowing
go over
growth
this
and a recession.
FOMC
Many
issue.
forecasters had that.
And we're going to
And
see
that's
if
not
some
what
of this
happened. Instead,
volume,
the
because we
US
have a
is
lot of volume
anyway,
right now
it's
in
in
GameStop
sharp
and
distinction
AMC.
with
We're going to see
many
if some of
other
it plays
advanced
out.
economies around the world. So
There's a
that's
lot of
been encouraging.
options
I would say that
being
that
betted
today's
on
inflation report is
GameStop,
encouraging, but it comes
expiring
after,
next week, next month.
several
So there
reports
might
that
be a
were not so
lot of
encouraging. You ask about,
built-up pressure in the stock.
Your second question was really about shelter inflation. So I think if you go back a couple of years, we know that there are renters, and then there are people who own their houses, and we have OER, which is owner's equivalent rent. And so when market-based rents go up sharply, as they did at the beginning of when the economy reopened, they really went up sharply. Those play into rollover rents much more slowly for existing tenants than they do for new tenants. And so we found now that there are big lags. So there's sort of a bulge of high past increases in market rents that has to get worked off, and that may take several years. Nonetheless, as long as market rents are going up at relatively low levels, and they still are, this is just going to happen. It just is going to happen more slowly than we thought. We also do sort of this thing where we impute a rental value to owned homes, and that's many countries around the world do that. Some do it differently than us. It's something that the
All right, here we go. We're getting a little boom booms. We're getting a little bit of boom booms. Here we go, ladies and gentlemen, boys and girls. Hold on. I think this might be the last question. I don't know. But let's see.
Anytime soon. But
that cross retest was amazing, though.
One of the very hardest things.
Shout out to that cross retest. Shout out. Let's see what it looked like on the 5. Let's see what it looked like on the 5. On the 5, it tells you got a lot of runway.
They could rent.
A lot of runway to break this 5-minute 200, come up to 3056, which is what VWAP right there, 3056, and then take off. Mind you, this isn't. We're not going to actively trade this today.
Delays in realizing what's.
I'm just going to explain what's going on
We understand
in
that,
real
we
time.
understand.
And we're going to day trade next time.
Edward Lawrence with Fox Business. Thank you for taking the question, Chair Powell. So I want to go back to jobs and the consumer. The last jobs report showed that over the past year, 634,000 more people took multiple jobs. That's up 8.2%. And since January of 2021, we've seen prices rise 19%. So people are using their credit cards to pay for their lifestyle. What pressure points will signal to you that the slowing economy could maybe break companies in terms of hiring or break the consumer in terms of spending?
So, we monitor all the things you mentioned and more. What we're seeing is basically spending was going up faster than disposable income during big parts of last year rather. And so what that you'd expect to see is people spending more on their credit cards. That has been happening. Credit card balances have been going up. Credit card defaults have been going up. They're not at high levels. Remember that after the pandemic, people were cooped up. They couldn't spend money. They couldn't go out to spend money. They could spend money from home, but households were
Nope.
in very,
Here
very
we
strong,
go.
historically strong financial
Uh-oh.
shape. They've now
Get a little bit of volume.
worked off a lot of that. So we're watching that carefully. And, you know, what do we see? That's what we see. We see the same data that everybody else sees, but you've still got household sector that's in
Uh-oh.
good shape.
It's getting a little pumpy.
But
Whoa.
nonetheless, it's not
They go to
in
1
the
minute.
shape it
They go to
was.
1 minute 200 on GameStop.
We'll
They go to
be
1 minute
carefully
200 on
watching.
GameStop. If we were day trading, we would be cutting our
Are we to
position
that
now.
point where the
I
consumer
am not telling you to do
continue to spend as
anything,
it's spending, or
but
companies get
all
back
I'm
to it?
saying, if we
Consumer
were
spending
playing
is
in
still
this
growing.
now,
It's
we
not
would have
growing
wrote it
at
from
the pace
here
it was growing
to
at,
here. Cut
a
your
year or so
position,
ago,
call it
but-
a day.
but it's still-
That's going to be simple
it's still growing
TA for the
solidly.
later day.
And by the way, other
But
parts of the economy are picking
let's
up
watch it play out.
spending.
But
on
we're not waiting
equipment
for that.
and
We waiting
tangibles
for some
is-
boom booms, right? We waiting
picked
for the
up
mother
quite a
boom
bit,
boom.
you know, in the
But that would have
wake
been a
of all the
nice little
construction that
profit
we saw
taken right
of
there.
new
See how I got rejected at the 1 minute
tech
200?
plants.
Simple.
So
Simple. It's not over, but
overall,
it's
the
just a
economy
price
is
action.
exhibiting
Right?
solid
It's a moving
growth
average.
and, you know,
Comes up to
somewhere
this
around
moving average.
2%, which is
Test
a
supply.
good- a
If there's
good
enough
pace of
selling
growth
there,
for the
it'll
US
come down.
economy.
If there's not enough selling
But
there, it'll
you're
go
right,
right
though.
past it.
We-
And when
we
it
do see
passes
the
it, it's
same
going to
thing
be
other
a
people see, which is,
major move past it.
you know, increasing financial pressures on, you know, more lower income people, and you know,
Lower
the
income
best thing we
people.
can do
Say that
is,
shit.
is to foster a very strong jobs economy, which we think we have done. Ultimately, to get inflation under control, because those people experience inflation, you know, very directly, very painfully, and you know, once we get inflation under control, rates can come down, which will also improve things.
Hi, Victoria Guido with Politico. You've mentioned that an unexpected weakening in the labor market would bring rate cuts sooner, and I was just wondering, can you talk a little bit about what that would look like? Is it more of like a quicker pace of people losing jobs? Is it more the level of the unemployment rate if it were to start to go above 4.2 or something like that? How are you thinking about what you're looking for to see the job market unexpectedly weaken?
You know, when I say unexpectedly, the first thing is more than kind of is in our forecast or in common forecasts. So something more than that. But we'll be looking at everything. You know, the labor market, you know, has the ability, has the tendency sometimes to move and to weaken quickly. So waiting for
Really?
it to happen is not what we're doing. You know, we're watching
say
very
the
carefully.
labor
We're
market
looking at
had the
balance of
potential
risks.
to
I
weaken
always
quickly.
point out the balance of risks. So, and also the fact that we look at all of the whole situation. So, you know, a decision to begin to, loosen policy could have several reasons associated with it at a given time. But I would just
I gotta start
we
taking
monitor
notes.
all
There's a lot I wanna talk
labor
about.
market data, and
What he's talking-
if we
what he's
saw
saying
troubling
is bullshit.
weakening more than expected, then that would be something we'd consider responding to. But we look at the broader context of what's going on too.
So something like negative payroll numbers would be.
I'm not going to. I mean, I can think of things that would many things would make it on that list, but I don't think I'll
Negative payroll numbers.
utter them here.
Thank you, Chair Powell. Simon Urbanovich with The Economist. May I ask, you mentioned with the slightly higher PC readings earlier this year that it wasn't 1 or 2 months, but 3 months that tipped you to be a bit more cautious in the rate outlook. Should we take from that it looks like May will be quite good for PC as it was for CPI? Does that imply that kind of 2 more good months would reinstill the confidence that rate cuts could be coming sooner than you currently project?
You know, I don't actually have that kind of.
And that's why we take profit.
In
You
my
see that?
thinking.
You see that
I
rejection
get
on that
that.
200 on the 1
As
minute?
many
Take
good ones
profit.
as we had
I
bad
don't
ones,
care.
but it's
It
not
might go
like that. It's the
bananas.
whole-
It might
it's
go
gonna be the
$10
totality of the data.
past
The labor
that
market
purple
data,
line.
the growth data. In
We don't
terms
give a
of
shit. We
inflation,
bought in way down here. Mentally.
You'd
Remember,
you'd
mentally.
want to see real progress that builds your confidence that we're
Don't
that
trade.
we
We're
are
gonna
on
trade.
a
We're gonna
path
trade.
down to 2%.
We're gonna trade.
And,
Not right now. Not today.
I don't want to try to give you specific numbers of things because that points to dates, and I just don't think we're not at a point of being able to do that.
Thank you for doing this. I'm Kosuke Takami with Nikkei. I would like to know about the impact of stronger dollar on U.S. economic growth and prices. And I have no doubt that the market should determine the exchange rate, but Japan and some emerging markets are suffering from the strong dollar. So I want to know if it is having a positive impact on U.S. economy in total. Thank you.
So we don't, actually, it's our finance ministry, the Treasury Department, that has a responsibility for thinking about and if it sees fit, doing things about the level of the dollar. So for us, it's just another financial variable. And you're right, the dollar has been has exhibited some strength over the course of the last year or so because the U.S. economy
It
is very
has?
strong.
Look like the dollar
we don't
getting
think
weak.
of it as benefiting or
Oh,
hurting
no.
the U.S. We don't manage the level of the dollar. That's not our job. It's not.
Let me
and
see.
For our
Let's check
economy,
it.
what we're trying to foster.
Let's
is
check
maximum
Dixie.
employment
Oh
price
my
stability,
goodness, look at Dixie.
and we feel
Look
like
at
we made
Dixie.
good progress on both of those.
We're gonna check
over
Dixie on the
course of
daily though.
past
We're
year.
gonna check Dixie on the daily. He said that the dollar. He said that the dollar is.
Thank you, Chair Powell. Jennifer Schonberger
Is
with Yahoo
strengthening.
Finance. You said you would cut rates before
Huh.
inflation.
This is the
falls
dollar
to
on the
2%.
daily.
You're forecasting inflation every year at
Now, I'm gonna tell you something.
2.8% on core PCE.
I'm gonna tell you something.
2.8%, of course, on
You
core
see this
PCE.
beautiful
Right now, you said the inflation
purple line?
forecast
I guess
is
they say the
conservative,
magenta
and that
line.
if you
I'll go
got
with
2.6
magenta.
to 2.7
That's the
on
200 daily.
PCE, that would be a
200
good place to
daily
be.
EMA.
You also
If
indicated
the dollar
job
comes
market
underneath
has
this 200 EMA, which is at
normalized. So why not cut
$104.37,
rates
she's
this
trading at
summer just once? You're well above
$104.69.
neutral.
If she
Try to
comes down
preserve
and
the
crack
soft
this
landing
200 on
rather
a
than
daily,
risking
mind you,
waiting
the
too
14
long and a
EMA
quest
is
for
underneath the
confidence for
32. It looked like it's getting
You know,
ready to try
so
to cross above
we're
it. But
well
if it
aware
don't
of
and
the
it cross
two-sided
below
risks
the
here.
200
Let me just say,
EMA, Lord have mercy, this
we,
dollar is coming all the way
we
down
understand
too.
that
Let's
if we
see,
wait
let's
too
see, let's
long,
find some levels because
that could
102
come at
isn't
the
healthy
cost
enough for
of
me.
economic activity, of employment, of the expansion.
Will we see
We understand that if we
160?
move too
Will we see 100?
quickly,
Let's see.
we could
Will we
end
see
up
100?
undoing a lot of
What
the
else
good that
can we
we've
do?
done and have to then
We
start
got a nice
over,
lower
and
99.
it could be very disruptive.
Hmm.
So we're extremely
Hold on, we're gonna get
aware
froggy.
of
We're gonna
both-
get froggy.
both of those risks.
Let's
and-
get
and
froggy
just
real quick.
basically
Let's see
try
where the
to
dollar
manage
can
it.
actually project to come down
And
to.
what we
Let's
said
just
is
see. Let's
that
go to the
we'll-
yearly real
that
quick.
we'll-
We're gonna do some funny things. We're gonna do some
we don't
funny
think it'll
things.
be
This is the yearly chart, you guys. The yearly chart is
begin
something that
to
a lot
do
of
some
people don't
policy
look at,
until we're
but
more
I think you guys should.
that
Now, there's
inflation
a
is
key
moving
level
down
on this
2%
yearly chart. Now,
over time
mind you,
on a
200
stable
EMA is
basis.
my friend. I
That's-
love the
that's
200
kind of
EMA.
been our test.
I don't know what Powell
Or
talking about.
there's
I'm
another
sorry
test, which
if
is,
if I'm drowning them out and you wanted to hear them, forgive me.
labor market
But I want to
conditions.
talk to you about this
I think
200 EMA.
that's the right
Mind
way
you, this
for us
is
to
the
think
yearly
about it.
chart. If you
That's
look
our-
at the
that's
dollar
our
on a
dual
yearly,
mandate there. And,
she is trading right
you know,
at
we
the 200
have a strong
EMA
economy.
on
We've
the
got
yearly at
growth.
104.
All
Sign.
forecasts are very
All right,
commonly
where is it
around
at?
2%.
104.72.
That's a
If you look
strong
at it
growth
right
rate
here,
for
it
our
says it right
economy.
there.
The labor market
104.72.
continues to print jobs at a pretty high rate.
It looked like it took
Unemployment's
one,
still low,
two.
so we have the ability.
We came up here. What
now
year is this?
to
What year is this?
approach this
2017.
question carefully, and that's what
It
we're
came
doing.
up
Just to follow
in
up,
2016, got smacked.
you need to
2017
be
came back
ahead
down to the
of a
200
weakening in the
EMA
labor
on the
market.
yearly. 200
Otherwise,
EMA.
is it too
Came
late,
back down,
given that
consolidated.
the
Then we
labor
got a
market is
yearly
lagging
cross.
right?
What was that? 2 years ago? What was this?
Yeah, we
2022? We
completely
got a yearly cross.
understand
No,
that
last
that's the
year.
risk,
Sorry,
and
a yearly
that's
cross.
not what we're- that's not our plan.
2023. There's a
It's to
yearly
wait for things
cross.
to break
What
and
happened
try
in
to fix them.
2022? We broke past
trying
the
to balance
200
these two
EMA on the
goals
yearly
in a
and
way
came
that
back
is
down.
consistent with
Now,
our
this is what
framework.
I'm going to tell you.
And, we
guys.
think we're doing that.
This is how bullish and bearish this EMA is. This is a real life key indicator for me.
Thank you, Chair Powell. Evan Reiser with Market News International.
If the dollar,
you have
what we got?
mentioned before
4
the
months,
framework
5 months?
review
If
process
the dollar
will start in the latter half
closes
of the year,
underneath this
at
200
this
EMA
point,
on
do
a
you have any
yearly,
specific time
best
frame for the
believe
start
we're
of
coming
that?
down to $70.
Who will lead it? Will you be
Just
will
best
you
believe
or
it.
a member
They're going to
of the
start
committee?
blaming China, Russia, all that other blah, blah. Yeah.
Be the parameters,
But best believe if we
do
do
you
not
anticipate
close
the
this year,
review will consider
2024,
changes
above
to
this
communications going
104.70, we're coming
So
down
we-
to $70.
What we've been thinking is that
That's
we
just
would
simple to
announce
you.
and
Cool?
commence the
Cool.
review later or late in the year. In the meantime,
Oh,
as that
that's the
time
spy.
approaches,
My
we
bad
will
on the
be
yearly
devoting a
chart.
lot of
My
careful thought
Fibonacci's
and planning
on the
to
yearly is
contours
just.
of it.
I keep it on the yearly.
Within scope
I'm
would
ready for
certainly
this
be
thing. She broke.
Communications.
I'm ready for
generally.
this thing to
I'm
start
not gonna
coming going down on the
say
yearly.
that we'll look at
There's going to
this
be
and
a
that particular
significant
thing.
market crash. I'm not going to
And
be
all the
that
other
guy
details,
right now and
you
just
know,
start
we're
screaming
we don't wanna
doomsday
get
for everybody. But
prematurely into a conversation
follow the
until
spy
it's
on the
really time to
yearly.
have
It'll
it.
let you know
And so,
where she's at.
you know,
It
we
will.
leave pretty much everything else to later in the year.
Hi, Chair Powell, Nancy Marshall-Genzer with Marketplace. Just one more question on housing. Can you still cut rates with shelter prices high, or will you wait until they start to moderate a bit?
Good question.
I wouldn't. There isn't any one thing, one variable like housing prices moderating that would really decide against what we're doing. We've got an overall test, which is greater confidence that inflation is moving down to 2% on a sustainable basis. That's our overall test.
In other
Or
words,
alternatively,
it's too
we
expensive
see
to cut rates right now.
unexpected weakening in
It's
the
too
labor market.
expensive.
So
People gonna be buying
those are-
shit
those are
up
two different tests.
at
I
the
would
top.
say, you
So
know,
he don't want to do it right now.
we're not looking at any one price in any one sector and saying that's the one. We don't target housing prices, for example.
What?
We don't target wages. We target aggregate prices and overall employment. So
But if housing prices remain sticky, could that slow down?
All the
the
mortgage-backed
pace of rate
securities,
cuts?
say
I
they
think
don't.
you'd look at the we'd
housing
be looking at the
prices.
aggregate numbers and asking
All
ourselves.
them MDSs he talking
what's
about, we
going on
don't
here
do
with
merch.
inflation?
We don't come on, you shut the fuck
You know,
up,
and
pal,
it's-
nigga. All them mortgage-backed securities, the Fed is holding. I don't want to hear it. It's okay. We'll talk about it later.
Any price that contributed to ongoing disinflation would matter too. I wouldn't single out housing as having
We checked
a special role there.
the employment data too. Shut the fuck up. Oh, we done? We done? Oh, we got more questions? I think we done. Are we done? Pal, you leaving? Yeah, we done. Oh, he's leaving, ladies and gentlemen, boys and girls. It's time to trade. It is time to trade. Goodbye. Goodbye. You over here putting a little funk in the market, a little funkity funk in the market. We're going to go ahead and close this out just a little bit. All right, as GameStop tends to retreat. Oh, Lord. AMC is coming down as well. SPY is coming down as well. Now, pow. What do we say? What do we say? Why we didn't get cuts? Like Canada? Canada just cut rates, what, last week? Why we didn't cut? Powell said it's because the labor market is still kind of strong. He also said that the housing market is a little high, but we ain't looking at it. We ain't looking at it. Shit. Lord have mercy. So in other words, all you people that was fighting for higher wages, all you union guys that said, hey, we not going back to work until we can reach some of them profits that them CEOs. Powell said, well, I ain't cutting rates until you niggas chill out. Damn. Wait a minute. Wait a minute. Because people want $15 an hour, a living wage. Some people is crying for $15 an hour. Jerome Powell said, well, that's too strong. These worker bees is like, they fighting. So I can't cut rates yet. It's going to still be expensive. It's disgusting, man. It's disgusting. You know, one of their markers is that they look at, indicator they look at is unemployment. And you got to ask yourself, why do you look at unemployment? Why do you hope that people are unemployed? I'm sorry, that's what they do. They hope that you're unemployed. They look at it as be like, oh, man, there's not enough insurance or uninsurance claim or unemployment claims going in. There's not enough for us to even react federally. And we have to ask ourselves, why the fuck do you want people to be unemployed in order for the market to move? I mean, it's common sense to me. I mean, you know, the feds want you to depend on them. That way they can go ahead and pull the money from the market and go ahead and take care of y'all through social programs, right? That's just what they want. They don't want a strong economy. They don't want a whole bunch of people working and taking care of themselves. No, they want to be reliant on the Fed. And the Fed's like, damn, these niggas is working. Shit. Charge them more. Oh, you want to buy a house today? You got a good job? We paying you a great wage? Charge that nigga more. Lord have mercy. It's crazy. It's crazy to me. But it's all right. Because the way I position myself is, shit, I'll play it up, I'll play it down. I'm waiting to buy property later when they drop the rates. Or is my income going to go lower? Maybe. I don't give a shit. Go ahead. I'm not filing for unemployment like you want me to, motherfucker. But listen, if I do, I bet you the market go high. I bet you if everybody in here go right now and go apply for unemployment right now, the next indicator, they're going to see it. They're going to be like, all these Americans are applying for unemployment and the stock market will fly. But it's disgusting, man. It's disgusting. It is. As the SPY tends to come back down, and that's why, I don't know if y'all was there or y'all heard me when I said we taking profit at this 1 minute 200. That's why. As you can see, she did not break the 1 minute 200 and she started to come back down. It's just a simple indicator. That's it. Sorry. And we're still on the 1 minute. Sorry. Let's check the 5. Let's see what the 5 is telling us. The 5 is telling us Oh, look at that. This is what I call basing. Me personally, I don't know about y'all, but if you can see this consolidation right here, it was 5, 10, 15, 20, 25, 30 minutes of consolidation. These are 5-minute candles. It sat here for a nice little bit and broke past the 5-minute 14 and then came back down. If she doesn't go lower than this, which is whatever that candle is, a low 2730 something, 2730. We'll call it 2730. If she doesn't go below that, then this is still a bullish setup. If she goes below it, then you got to start over. Then you got to start the consolidation over. So we're just looking for that 2730 and some change to be reaffirmed and continue her ride up. Let's see what happens. But yeah, Powell got us fucked up. Powell got us fucked up. He do. He do. And it's all right. It's all right. We all gonna be sitting here one day, and we won't need corporate income. We won't have to wake up at 6 o'clock, 8 o'clock in the morning and leave our families to go and put food on the table. We won't. It's gonna be that day where nobody's gonna be working and nobody's gonna be on unemployment. It's gonna be that crazy day, and they're gonna be mad. They're gonna be mad. Look at this bitch. She coming down hard. Oh my goodness. Hold on to your pen. I got down exposure too. I will let y'all know. I guess this is a good time to start telling people what I have. Now, I told you already, I've been in AMC for a long time. I had position. Oh, look, you can see right here, I have 120 shares at $16 of AMC. I've been having these shares since 2021. Price adjustment after the split, I had a position of like $70 or some change. So yeah, I've been averaging down, but this is I have about 800 shares of AMC. This is only one position on my Webull account. Mind you, I have one call left because the way I trade is I think I had about 7 of these 1450 strikes for this week. Them bitches ran up like 80%, bro, and I sold all but one of them. Simple. I think they ran about, I think I bought them for $3, $2. They ran about $14. Sold all of them. I mean, now this one gonna die. If she don't die, she don't die. She do, whatever. But those are my positions right there on Webull and Webull only. I do have all the other positions on Merrill and others, but I don't think I have to show you that right now. I don't think I do. But we're gonna see how this plays out. GameStop is coming down to key levels. Let's go ahead and check some more levels. I'm a big fan of the 4 hour as well. We're going to go ahead and check the 4 hour, see what we're looking like on the 4 hour. The 4 hour chart tells us that we have a nice retest of the 4 hour 200 at 22.95. Is she going to come down to 22.95? Nigga, I don't fucking know. But all I know is she start breaking these levels here like she did. She has the potential. She does. She does have the potential to come all the way down to 22.95. Let me go ahead and check this daily. We're going to check the daily. Okay. What does the daily tell us? The daily tell us that we are trading at, we're trading right at the daily 14, 27.63. 27.63. We are right under at 27.27. So if we close above this 27.63 level, we good. We still got action. Mind you, I don't know if Ron Kitty's still holding his contracts. He could have sold them bitches today. I don't know, before Powell came on. Who knows? But what I do know is that this play is far from over. Far from over. You can look at the daily chart. You can look at the 4 hour. She's above the 200 EMA on damn near every time frame. Right? Right? You can go to 2 minute. No, I lied to you. She's underneath. Go further out. Further out. Because that's my favorite indicator. Hold on. Where did we stop at? We stopped at the, nope, we still underneath on the 15. Hold on. Where we at? 30 minutes. Go to the 30. Oh, we underneath it on the 30. Hold on. One more. Before my blunt get dry, I got to roll my blunt, y'all. The hour. Okay, we closer to the hour. We're closer to the 1 hour. So let it play out. There's a lot of people that with a lot of exposure. There's a lot of call contracts expiring. This week, I got a couple. I sold a few, but I got a couple. I'm down on them significantly. I think I got them for about $45. They're trading at 12, 14, something like that. I am down on them. Yes, I am. As the SPY continues to fall. Now, There's a lot of time left in this market. We got about 29 minutes left in the actual trading day. And we're going to see what it brings. Today is Wednesday. Tomorrow's Thursday. So if you have any weekly contracts, I tend to like to be out of all of my weeklies by Wednesday. Sometimes I don't even care. Let them die. But yes, Theta will whoop your ass. If you're holding contracts past Wednesday, you're going to start seeing the value of your contract diminish fast. Real fast. But let's see how this plays out. Let's see how it plays out. There's a lot of attention on this stock here. I didn't buy no GameStop puts. I did want to. I'm not going to lie. I did want to buy some puts. Oh, man, them puts would be printing right now. Yes. Yes, they would be with my scissors. Where's my scissors? Hold on 1 second. Let this shit play out. Now, I got another thing to talk about. I got one more thing to talk about. Oh, shit, I dropped my blunts. Hold on 1 second. Let me check something real quick. Yes. So I got another thing to talk about. There's a lot of streamers out there that are a part of this ape community. A lot of them. A lot of them are bullish. A lot of them are bearish. A lot of them are heartbroken and butthurt because they took a lot of losses. I don't think I'm going to drop names. Maybe. We'll see. We'll see how this conversation goes. But I just want everybody to understand that when it comes down to these plays, I know that mentally we know these decisions are ours to make. We all know that. We get it. It's my money. I went, I bought, I sold, yada, 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 yada. But it seems like when people lose money, they like to blame these streamers, YouTubers, people in even financial media. They blame them, right? Now, if you haven't noticed, a lot of time when people cover these stories of AMC and GameStop and these meme stocks, they always talk about how much money people lost, right? They never talk about how much money people made. No, they always talk about the downside. Oh, people are going to lose money. They're going to lose money. They're going to lose money. What I realized with these streamers is I think a lot of them had pumped these stocks up to a degree to where their channel had blew up due to their pumping up these stocks, right? And now that the stock is down, they feel like their channel was down due to the stock. So now they have this bias, like, oh man, fuck AMC, I don't want to talk about it. That bitch down 90% from the high, yada, 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 right? I have a big issue with a lot of these streamers because they forgot where they came from. They forgot what made them. A lot of these streamers, they had like 2, 3, 4, 5 viewers, like how I got right now, because I ain't been streaming in a while. That's how they had in the beginning. Once AMC and GameStop started to go bananas, them bitches went and got, 10,000, 20,000 viewers. And then it start to slow down, and the stocks start to come down, and then their viewers start to dwindle, and now they talking bad about the stock. Now they talking shit about the stock. Oh, this is stupid. Oh, I should have sold it this. Oh, my money that. Oh, I lost viewers, subscribers, and money. Bitch, like, this is the whole cycle. The stock market is a cycle. It goes up, it comes down, it goes sideways. It goes up, it comes down, it goes sideways. It goes up, it comes down, it goes sideways. You mean to tell me, during the height of the market, when everybody was being, I guess they were happy, they had stimuli money to spend, putting it in the stock market, watching it go up, viewers or streamers were getting thousands of views, everybody was smiling. That didn't look like an uptrend to y'all? And then when it started to come down, nobody was playing the downside, but when it started to come down and all the people ran away and started crying, like, oh, this market is rigged, that didn't just look like a simple downtrend to y'all? And then when the bitch started going sideways, like AMC went from 72 down to, $2? Price adjusted. Of course, there was a split. People say, oh, it's down 90% from the high. It's over. What do you mean? It's over? It's a wrap? The play is done? There's no sideways? There's no downtime in this play here? I was getting, I wouldn't say getting into it or had an argument. I had a debate with somebody on Facebook the other day talking about, talk to me when AMC is back to $40. $40? Nigga, you waiting for $40 for AMC to come all the way back? You didn't average down shit. You didn't buy no shit. AMC was trading at $2 for like 2 months. You mean to tell me you didn't buy nothing? Nothing. So yeah, when it comes down to these YouTubers that is literally pumping the stock and their channel is literally thriving off of the green days of these stocks, when it's red days like this, they feel like they can't stream. They can't talk positive about it. They can't even talk about it no more. Me personally, shit, I love it when it's down. I only got 800 shares. I don't never think I have enough. I don't never have. There's no such thing as too many. So yeah, AMC, we've been buying it up under $5. She's still under $5 now. I might buy some more today. Do I sit there and be like, oh, this play is dead? It's over? Look at my position here on Weeble. Motherfuckers at $16. The AMC trading at what? $4.90. I'm down what? 65, 70%? Nigga, am I crying? No. Other people might be crying. They're mad. They think this play's over with. They're allowing the FUD to get to them. So me personally, I'm the kind of trader that don't listen to none of that shit. Don't listen to the streamers. You got streamers like, damn, I don't want to drop names. Do I want to drop names? I ain't going to drop names. I'll just say, you got Roy and Kitty coming out with a video about holding 120,000 contracts that expire next week. They're $20 strikes, and he has the potential to exercise them, right? Either take his profit or exercise them. Today, I guess earlier, he was up 100% on them contracts. I think he spent like 500 and some change on them. The contract was worth almost 12, right? Now, people in this, what you call meme stock club, somebody called it a cult earlier today. One of the short sellers got rid of his shit. The Citron said we're in the cult. But it's all right. But people in this cult, I'll call it a cult just for purpose, got the nerve to say about Roy and Kitty. They were saying shit like, he's I wouldn't say piece of shit. Those are my words. But he's messed up for not exercising his contracts. People were mad at him for not exercising his contracts the day that they wanted him to do it. To be honest with you, before he went live, I guess he went and said he was going live and told everybody, hey, tune in, I'm going live. At that day, before he even got to finish the tweet or whatever, the message on Reddit, people were speculating that he was getting ready to exercise his contracts. There was messages going all over the place. Oh, hey, Roy and Kitty, exercising live. He exercising live. He exercising live. Tune in, tune in, tune in. And then when he didn't do it, a whole bunch of people got butthurt. They was waiting for him to exercise contract that he probably never said he was doing. That probably wasn't even his words. But you got a lot of people in this community that is literally mad at the man. Talking about his stream was a waste of time. Talking about he could have did this, he could have did that with his money. They're telling him how to spend his money. Nigga, what? Sit your ass down somewhere, man. Let this shit play out the way it play out. Because a lot of these people sounding like they're putting too much money in a play that they cannot afford to go the wrong way. Now, mind you, I don't think Roy and Kitty sold. I don't know. He posted what, yesterday? That he's down. No, was it the day before that? I think he posted like on Monday that he was down X amount of percent from the time he was up. He was still up like 18%, but it wasn't as much as it was during the stream, right? Mind you, he was up today when the stock flew because it was up 22% yesterday, right? Do you think he sold? I don't fucking know. I'm not trading on his ass, but do you think he sold? Who knows? Who knows? Do you think he's going to exercise? Who knows? Who gives a fuck? All you know is that you have some ducats in this play and you want to play it out. You ain't got to blame nobody else. A lot of people blaming everybody else, and then it gets to this whole, well, let's contact the SEC because some people got hurt. Bitch, no, we ain't contacting no fucking body. Take matters in your own hands, pull your big boy pants and women your panties up, and realize that you probably made that mistake. You bought in on somebody else's sentiment. You didn't sell when you were up. Don't blame nobody else. Because this man don't execute these contracts. If this man was out yesterday on 120,000 contracts and took his profit, and y'all still sitting there waiting for him to exercise them, and he don't, and you get mad, that's on you. Mind you, I'm holding GameStop contracts too. Some for this week, some for next week. Some are down, some are up. Am I holding? Yes. Do I give a fuck if they go down? Nigga, no. Why? Am I going to blame Roy and Kitty? Fuck no. Wasn't his fault. No. We all want something to go a certain way, but you can't blame it on somebody else if it don't. Now, my blood's getting dry. I'm rambling. I'm sorry. Sorry, I still got people on the phone. My bad, y'all. I'm here. I just had to give him a little spill. Just a little spill. You ain't got to clean it up. Let that shit just sit there like a puddle. Ha! Shit. Berta. Write that down. So, yes, I'm an active day trader. I play calls. I play puts. I do invest. I am an investor. I do buy shares. I buy shares all over the market. I don't just buy meme stocks. Everybody, there's some people out there in the community that all they have is meme stocks. That's it. That's it. Their basket is full of 2 stocks. That's it. Hey, and granted, shit, bro, that's your portfolio. You do as you please. Mine consists of, a whole bunch of other stuff. I got meme stocks. I got a lovely meme stock basket. I got some blockchain in my basket. I got some EV in my basket. I got some energy. I got some, I am well diverse. You know what I mean? So when the market is moving like this and we're only waiting on 1 or 2 stocks to move and something else is moving, yeah, there's people that are literally discouraged. They hate this market. I see people all the time, man, AMC down, I'm going back to sleep. Fuck, what? Wait, why? That's all you got? Bro, wake up. At least, find something. China moving. Like, hey, listen, my tinfoil hat, I can entertain y'all with a little bit, but when it comes down to GDP, shh, don't tell nobody. I think when it comes down to GDP, Chinese stocks tend to perform. I don't know why, but I've been following this for a long time, and it seems like every time GDP numbers come out, stocks tend to go up. They do. Why do I think? Let me tell you where my tinfoil hat is, because I could be wrong. Shit, call me wrong. Call me whatever. Call me crazy. Call me a conspiracy theorist. I don't give a shit. Not 2 fucks. But we all know that this country works on treaties, borrow money, debt. A lot of people own our debt. A lot of people. And a lot of these countries that own our debt, they want their money. They do. If they see that their position is going up to a certain degree and they trying to cash in, oh yeah, some of these positions could send us back to the Stone Age. Yep. If some of these countries sold off the debt that they own, and they say, hey, I don't give a fuck what America dealing with, whatever our GDP is in the 40 trillions and whatever, we got to pay a whole country like 5% of that. They will send us back to the Stone Age. So I feel like when it comes down to GDP numbers, we are just basically making a payment. Yep, making a little payment to keep them people off our shores and say, hey, here's a couple ducats. I know you can go ahead and exercise these contracts, but please don't, because if you do, then the president's going to be in a soup kitchen and try to get his pasta. But if you don't exercise them, we can go ahead and give you about a little bit, give you about 4% of this. Can we, please? And then the next thing you know, Chinese stocks tend to take the fuck off. Why? I don't know. I could be wrong, nigga. Shit, don't trade on my motherfucking spiel. But it happens all the time. So GDP coming up. We're going to see. We're going to see if I'm wrong. We're going to see if I'm right. As the market continues to fall, GameStop is now down 17 whole percent. 17 whole percent after being up, what, 10? Something like that. She was up there. She down 17 whole percent. Is it Roy and Kitty's fault? Shut the fuck up. Shut up. I don't think so. But let's just watch this shit play out. Let's watch it play out. I'm tired of hearing everybody blaming somebody else. And then you got financial media. Oh, Lord. CNBC, they going crazy, ain't they? They going crazy over this kitty cat, bro. Damn. Talking about, I know he did some kind of manipulation. Is there any way we can look into it? Why? The fuck you want to look into it for? Go sit down. Ain't y'all millionaires, man? Trading on your own accounts, man? Worrying about some random-ass retail investor that put in some yellow-ass degenerate play? Why are you calling in the SEC? And then think about it. Every time the stock is down, they laugh, right? They laugh. Oh, these dumb-ass kids and dumb money, dumb. I thought dumb was an insulting word. But it's all right. We're going to call us dumb. Dumb money. They laughing. They having a good old time. When the stock is up, them bitches is calling for the SEC. They crying. They foul play, market manipulation. Check his Reddit account. Who is he tweeting? Who is he texting and emailing? Sit your ass down. Sit down. Because we all are actual, how you say, if anybody that's been in the market for at least about 5 years, you are a different breed than the people that have been in the market for about 50, 60 years. The people that have been in the market for about 50, 60 years, they were taught the market. You know what I mean? They learned certain things on different programs that didn't move the way that they're moving today. The people that have been trading for about 3, 4 to 5 years, they studied the market. They didn't learn the market. They weren't taught the market. They studied it. They know how these candles move. They know how to check different time frames. They don't really care about that old school trading from PE ratios to EBITDAs. They don't. They are high frequency momentum traders. And you can't beat them. You can't. So you can cry all the hell you want, say the SEC needs to step into some of these Reddit forums and see what these kids are talking about. You can do that shit all the fuck you want. It ain't gonna work. No, it ain't. Sorry. All you doing is making yourself look even worse. Even worse. So keep coming on CNBC, bashing this stuff. Watch today. I bet you there's going to be a cold-ass headline today. Oh, Rowan Kitty is getting a little close to expiration. The stock was down 15%. He must have lost billions. That's what they're going to say. I bet you. I ain't no fucking fortune teller, but I bet you they say some stupid shit. I bet you. As she continues to come down. As she continues to come down. So we're going to play this shit out. We're going to roll it. We're going to roll it. We're going to see what happens. Right? Hello? My bad. I do have people on the phone. Yeah. My blunt is dry. I need to roll it. I need to smoke. Hold on. Am I allowed to do that? Can I smoke? Can I? I think I can. I don't think they tripping. Fuck them. Got my nerves bad. But there's also some YouTubers that are good. That I'm a fan of, that I follow. You know, they got actual TA. They get on here and they trade. That's all they do. They trade stocks. They don't talk bad about brokerages. They don't talk bad about communities. They don't talk bad about stocks. Nope. They just sitting here watching the momentum go. And they're trading on it. Those are the people that I follow. And of course, you know, the people that like to come out with all the data. You know what I mean? Because I don't be feeling like reading no fucking 13Fs and shit like that. So people be coming up quick. I got the reports first. Oh, I listen to them. I listen to them real fast. I can put that shit on play and ain't got to read a page. Nigga, what? Hell, shoot it. Shoot it. But yeah, some of y'all are just straight bitches. I said it. Nigga. Some of y'all act like hoes, bro. I be in their videos. I do. I be that guy in the video commenting. Every time somebody say something stupid. Oh, AMC is down. Oh, it's over. Oh, y'all dumb. I told you. You should have been in my video yesterday. I called it out. If you would have learned from me, if you'd have gave me $60 a month in my Discord, you would have learned that it was coming down. Shut the fuck up. So I get in there, and I like to clown them niggas. Like, bro, what do you mean she coming down? She just tested this, yada, yada, yada. We got data tomorrow, so the market ain't yada, yada, yada. There's always reason behind the move. And they fucking pea-brain. They think the reason is because they some psychic and they knew it was coming down and they want you to follow them for $60 a month. Bitch, why would I follow you for $60? I had a motherfucker yesterday. I ain't gonna say his name. Maybe I will. I don't know. Maybe when I get high, I might start dropping names. But I'm in this bitch's stream, right? Mind you, this motherfucker he's a narcissist, y'all. Mind you, I was watching him before Roy and Kitty came live, right? We was in this video, and then Roy and Kitty went live, and we all went to Roy and Kitty, and I think Roy and Kitty had about 600,000 people in that goddamn stream. And then when he was done, we all kind of merged back to the stream we came from. Oh, that nigga was in his feelings. That nigga said, why'd y'all leave? Y'all could have at least watched it from here. Y'all just gonna go to Roy and Kitty's stream and then come back to mine. Nigga, Roy and Kitty had like 600,000 people. That nigga had probably 800. And he talking about, everybody came back to my stream. Y'all could have sat here and watched it with me instead of giving him all them views. Wasn't he viewing it his damn self? I don't know. He had to have been viewing it on his show his damn self. But this shit fucks me up. It fucks me up how these people act. These fucking YouTubers are just, they're disgusting. They're disgusting. So yeah, this bitch is over here mad that people aren't watching his stream when Roy and Kitty came on. And then he's that guy that call out obvious plays. Have you ever seen an obvious play? Like the stock is trading. I'll give you a prime example. That's what this nigga did yesterday. Oh, it was beautiful. I think AMC was trading at like $4.91. What was it, Greg? Like $4.91, something like that. I think it was trading at $4.91. That nigga said, look, go on my Discord, you're going to see a cold ass play. Cold play. AMC $5. These AMC $5 strikes are about to go. Mind you, the stock is 9 cents out the money. This son of a bitch would act like he just had this layup fucking cold ass call out. Like, bro, y'all can't fuck with me. My Discord the best. Give me $60 a month. Look at this play. We are in the money. Our AMC $5 are in the money. And I'm watching the stream. The motherfucker said that shit like 13 times. Nigga, AMC went from $4.90 to like $5.20, $5.30. And this nigga sitting there like, pay me monthly for that obvious ass play, bro. Nah, man, I can't. Sometimes these motherfuckers just be motherfucking, man. I swear. God damn. But yeah, some of these people just You know who else? No, fuck that. I gotta drop this name. That nigga Matt Kors. I'm gonna call it out. Matt Kors. Sorry, bro. You's a bitch. I'm gonna just say it. I'm gonna say it like that. Matt Kors is a bitch. If you want to tag that nigga, I don't give a fuck. Fuck that nigga. He's a bitch. I'm gonna tell you why. We was all big fans of Matt Kors. I liked it, Matt. Matt was all right. You know what I mean? He's a little narcissistic too. You know what I mean? He's a little confident in himself. Had his little trades going on, making hundreds of thousands of dollars, showing everybody, look, I'm up, I'm killing it. You know what I mean? The whole trades and all of that movement, that was cool. You know what I mean? But Matt turned into some sucker out of nowhere. And I think it has something to do, I don't know. I wasn't there. I'm not his broker. I'm not in his account. I can't tell. But I think he sold AMC for a loss. I don't know. Don't quote me. He could still be holding. I don't know. But the way he act like a straight sucker. I was watching this nigga one day, right? Mind you, I think this was that day that we had that little mini squeeze. I think AMC went to about 13, GameStop went to 80. And instead of showing the charts, he was just sitting there, bitching, complaining, talking shit. Oh, these stocks, they cost me this, they cost me that, they this, they that, and the third, right? And you got everybody in his video saying, nigga, show the chart, bro. Hey, we up 45%. Hey, course. What are you doing? Show the chart. And then he started getting sarcastic with everybody. I see all the comments. Y'all want to see GameStop. Yeah. But let me finish my spiel. My rant. And we just sitting there listening to this hoe act like a hoe, bro. Like, bro, we get it. The stock is down. You probably down 75% if you still own shares, right? But we not listening to your doomsday story. We just weren't. It was that day that everybody has been dealing with this stock. Whoever's been in this since 2021, we all been dealing with the same doom year. It's been going down for 2 years. We know it, nigga. You ain't got to keep reminding us, bro. But on a 40% pop, on an 80% pop day, nigga, show the chart. Have a little smile on your fucking weird ass face. Embrace the community. Let niggas know. Oh, we still here. Apes together stronger. Nigga, man, this sucker, he's a hoe. He was sitting there the whole time talking mess about people that either didn't sell for a loss or that kept buying more. He was just like, this is just a stupid play. Just a stupid play. Yeah, it may be up today, but it's still a stupid play. And I was just in my feelings, you know. I'm sitting there texting this motherfucker, trying to comment in his video. You sound like a bitch. And then the motherfucker blocked me, you know, of course. Of course he blocked me. And I ain't tripping. They always block it. And that's another thing, these YouTubers, they be tripping me out. They be having a whole team of motherfuckers. Whole team of people helping them with one stream. And they be all in the comment. Hey, Samantha, get that nigga out of here. He's talking too much shit. I'm like, who's Samantha? You got a whole crew of people? You got to be a hedgy. You got to be a hedgy. You got a crew of people who fucking monitoring the comment section. I'm telling you, if I lick this blunt one more time and not roll it, y'all can say something about me. All right, I think we're getting a little reversion now. Remember, I was telling you guys about these key levels. There's 200 EMA. We are on the 1 minute. We are on the 1 minute. The SPY is trying to break the 200 EMA on the 1 minute. We are trading underneath it on the 1 minute for GameStop and AMC. These levels here just don't make sense to me, and I don't believe them. I don't care to believe them. Nope. Not at all. Not at all. So what do we have? We have about 4 minutes. 4 minutes until the market close. 4 minutes until the market closed, and I think I'm going to day trade with you guys live. Sometime either this week, next week, we're gonna see. We are going to see. I'm trying to get back into the swing of things. There was some technical difficulty this morning. Shout out to my wife. Hey, she was watching and told me. So we're gonna try to do some day trading. That way, you have something to do throughout the day. You ain't just sitting there watching fucking candles go up and down, right? Right? A lot of people just sit there and watch candles go up and down. A lot of people are just investors. They're not traders. You know, if you're just an investor and you're sitting there, you're buying shares at key levels and waiting for it to go up, then the downside isn't fun for you, right? So yeah, as traders, sometimes we'll play the downside and we will love it. We will love it. We'll talk about our positions. We'll say, hey, we made a lot of money in the market today. And the motherfuckers that don't understand trading, they will say, how did you make money? And the market was down today. You really want to know? Join my Discord for $69. Oh shit. No. But the market is there at your leisure. You can play it the way you want to. The way you want to is there for any and everybody. Any speeds. You can have you could be quick. You know, you could be that person that love volatility. You don't want to see stuff moving all slow. You can be that person that don't want stuff to move too fast. You know, you just want stuff to sit there and slowly grind up or down or whatever. This market is here for you. It is here for you. Me? Shit. I ain't got that kind of time. I want shit to move now. Right now. Move, nigga. Go. I don't care which way. I don't care which way. So we're going to let this play out for another, what, 2 minutes? 2 minutes, y'all. 2 minutes and the market is closed for the day. Tomorrow's Thursday. Let's see how things go. Yeah, buddy. I finally got it rolled. Oh, Lord, I finally got the blunt twisted. No, it ain't even twisted yet. My bad. Hold on. It's trying. I'm trying. All right, 60 seconds. Let's go. What is going to happen? Anything? Yes? No? I don't fucking know. I asked the question earlier, was Powell going to be hawkish or dovish? I don't know. I don't think he was either. I think he was just being there today. He didn't say nothing hawkish. He didn't say nothing dovish. He was just having his presence known. I'm still here. I'm still the Fed chair. But to sit there and pause rates, that's a nothing to everybody, right? Right? Look at these motherfuckers that piled into the stock market thinking he was going to cut. Now the stock market coming down because he just paused. We've been hiking and pausing and hiking and pausing and hiking and pausing for a while. Why we can't get a cut? I don't know. We'll see. We'll see. Maybe he didn't want Warren Kitty's contracts to go in the money. I don't know. I don't know. But we're close. It is now 1 o'clock Pacific time. And that is when the market is closed. I'll give it about 5 more minutes. I'll give it about 5 more minutes to see if it do anything. If it don't, then that's the day. Then that is the day. All right, all right. If you don't have aftermarket trading, that's on you. There's a lot of brokers that offer aftermarket trading, so look into that. If you trade in options, if you're familiar with options, the derivative market, then you know that you can't sell your options contracts at 1 o'clock unless you're playing an ETF, like the SPY or any other ones that give you like 15 more minutes. If you got SPY contracts right now that expired today, you got about 15 more minutes to get rid of them bitches. Then they did. But yeah, this market here, GameStop is up a whole percent in the aftermarket. I don't know if you guys were there when GameStop was doing those barcode candles at 45% up. Bruh, that shit was fucking me up. I'm tripping out. The hell, motherfucker going from $40 back down. $40 back down to 25. Just crazy. Let's see what happens. So yes, if you're not familiar with options, please learn options. That way you can understand what a lot of these people are saying when they're in the market trading. People, I wouldn't say they trade stocks. They probably do. But if you're not trading no high volatile penny stocks, you're not going to really see 30% a day on a trade. Unless it's that stock that's just squeezing, and you jumped in. But you would never see Apple go up 40% in a day. A 5-10% day for Apple is a squeeze. That baby move like $20-$30, yes. But if you're not trading options, then you're not going to see what people see when it's high risk, high reward. Because some of these contracts could run for 200-400%, and the stock only moved 1-2%. You know what I mean? So if you don't understand options, please learn them. I don't know if y'all familiar with the Nigerian brothers, Pete and what's the other nigga name? John. Pete and John, the Nigerian brothers. They got a whole fucking show. Talk about learning options. So if you don't understand options, you can go there. There's a lot of YouTubers that are explaining options. But don't just sit here and be a one-trick pony in the stock market. Because if you're an investor and you're just waiting for this shit to go up, up, days like this is going to discourage you. It will. I'm not going to get excited, but GameStop is moving. She's up almost 3%. She is up 3% in the aftermarket. We're going to sit here for another little bit. Hold on. This might wait a fuck minute. She up 3%. She moving. Wait. Hold on. Hold up. What we doing? Where's the SPY? SPY is still sitting there. She's a little red. She might be coming. Hold on 1 second. I'll give it another 5 minutes and I'm out of here if it don't do nothing. Now remember, I'll tell y'all about these key EMAs. This is the 1 minute 32. She break this 1 minute 32. She might be going on the run. Stay with AMC. It looked like they both are coming up to the 1 minute 32. If it gets smacked down to this off this 1 minute 32, then we're going to see continued downside. But this baby look like she's going to come up, confirm it, and then allow this 14 to cross above it. I wouldn't expect for any crazy volatility until this 14 crosses this 32. But we look good. We look real good. We looking real good. So yeah. We might end it right there. We might end the stream right there. I'm gonna give about one more minute. We break this 32 on the 1. We might be doing some running. But if not, I'm ending the stream. Hold on. Give it a second. Well, nope. It's coming down. Time is it? Oh, wait a minute. Oh, hold on. Give it a second. I'm trying to leave. I'm about to leave in a minute. But AMC trying to go up. We're going to see in a minute. We're going to see. If they're going to barcode for the next 4 hours, I'm not going to be here. But if them babies want to perform, I'll sit here with y'all. I'll pop a drink and everything. Okay, get a little volatile. Uh-oh, hold on. We're going to watch it for a little bit more. She might just be basing right there. We might just be basing right there. So I'm going to go ahead and cut the stream. And if we go bananas, hey, I'll come back. Why not? Why not? I like you motherfuckers. Why not? But I ain't going to sit here on no aftermarket consolidation. Nope, not me. Not today. But it was fun. If you don't want to miss a moment, please like, share, subscribe, and hit the notification bell. I will be back. I might come back tomorrow. I don't know. We'll see. Because I didn't get to make my money today because I was talking to you niggas. But it's all right. We're going to try it again. I love y'all. AFC look like she's trying to break out. She's up a 1%.